Hello traders, this is the power of key level trading, part 3. If you have not watched part 1 and part 2, you may do so before watching this one. In the first part of this series of video, we were talking about the media line on the yearly chart. All right. In the second part of this series of video, we were talking about the power of the high on the yearly charts. Okay, in this video I want to demonstrate to traders the power of the closing price on the yearly charts. All right, there are different type of key levels as I explained to you in the previous video. All right, but we are paying attention to ordinary key levels on the yearly chart. I also explained to traders that in order to achieve consistent winning trade or to make excellent investment, all right, one must always work with market stable data. All right, the fractal patterns are market stable data. All right, and the price always moving. If all financial instrument will move from one key levels to another key levels. Sometimes you may see that if the market is bearish the whole year, the bearish momentum will be completely evaporated as soon as the price hits a very important support level. Sometimes you may see the price being very bullish, going up, going up, going up, and sometimes as soon as the price hits a very, very important resistance level, the bullish momentum will be stalled. Okay? Looking at this currency pair, though we are using currency pair, it's valid for stock and for commodity, so it's applicable for all securities that we trade. All right. So the euro pound currency pair was going down. You see, beginning of 2014. Okay, you see 2014 on your chart right here. All right. This currency pair was going down. Okay. So since the beginning of 2014, you can place a vertical line there. All right. Yeah. See, this is the beginning of 2014. It was just going up, going down, and then went up, and then go down. Here, as soon as the price hit this key level, it start changing direction here. All right, start changing direction here. Now, it's not the price will, if the price is going down for a while and it reaches a key level, there's a high chance that the bearish sellers will take a kind of profit. They will take profit. All right. So you can see that it was going down and it was in a bearish channel. Right here was in a bearish channel. But as soon as the price touches the key levels, okay, this green line, which is a key level from the yearly chart, the price came out of the channel. All right. The price is always the financial instrument, the securities, all securities will move from one key level to the next key level. Trading is similar to driving. You are driving, you want to know where are the junction, all right, and know where are the corners, all right, so you can drive accordingly. So the same thing when we are trading, we want to know where are the major key levels. There are key levels on a daily chart, weekly chart, monthly chart, but the key levels on a yearly chart are superior to the key levels on the weekly chart, daily chart, down to the 1 minute chart. Sometimes we may see a convergence between the key level from the yearly chart to all time frame when the price is now at a specific higher time frame key levels. All right. So it's great to know where are the key level, yes or no. So price going down, the price looking for a better support level. But as you can see, once the price start going down, there are many support levels. Now it's up to us to analyze the validity of each support level. So if you are a little bit curious and you push it a bit to the higher time frame, like a yearly chart, once the price, suppose you see this double bottom here, okay, or this kind of double bottom here, what will go through your mind? You'll be wondering, there is a better support level here, which is in fact a key level. It's not an ordinary support level, it's a major support level on a yearly chart. You will be saying to yourself, if I'm taking this trade, I need to be careful because the smart money will prefer to bring it to the best support level, which is the closing price right here on the yearly chart. All right. And as you can see, the price dip below this blue horizontal line and try to retest it here, and it continues slowly until it reaches that level. Sometimes, if traded as swing trading or day trading, they may set a target or a pattern may be completed. Suppose you are using an alien wave pattern, you are using a Fibonacci pattern, and the pattern is completed, all right? You count your 1, 2, 3, 4, 5, you are happy, okay? You say that this is it, this is the end of the fifth wave, but to your surprise, the price continues to go up. You do all your verification, you use your fractal market projection, everything, but you're wondering why the price continues to go down. You see your pattern being distorted, or your strategy has failed for once, and you are wondering what's going on. The reason is you are fighting the market stable data. The price is always looking for a better support level. So if you are using Fibonacci pattern, alien wave pattern, chart patterns, all right, we must always, okay, pay attention to the market stable data. So at this point in time, though there was a double bottom pattern on this daily chart, even a triple bottom here, people will think that the price is going to go up, but it's not going to go up very much, because what will go through the mind of professionals, they will say, why don't we just bring it to the best support level before buying it? Why should we buy it at a support level that is not as solid as this green one? So the best, okay, the best wisdom will be to bring it to the best support level, which is the green line here. I want to show you now on the yearly chart the power of the closing price on the yearly chart, okay? Looking at the euro pound currency pair, all right? This is the, okay, this is where I draw the vertical line on the yearly, on the daily chart. This is 2014 candle here, you can see. You see this candle here, this is 2008. Something important has happened in 2008. You see some years like 2008, all right, 2003, these years where, okay, the global economy, okay, will go through a change, all right. You need to pay attention to the high, the low, and the median line, or these candlestick bar on the yearly chart. So 2008 was, okay, 2008 was the financial crisis, okay, and the closing price for this currency pair is the green line here. You can see that few times, you see here, in 2010, it tried to come and retest it, but when it came very close to it, people bought it. It went back up. In 2009, it tried to come near it, but it couldn't. You can see it was heading towards it, but it couldn't. It was stopped somewhere near the median line of this candle instead. But once the median line, which is the first key level we talked about in the first part, was violated, the price was looking for the next key level. So once the median line is taken out, the next key level is the closing price. All right? If the closing price is taken out, the next key level is the low. All right? So the high, okay, and the median line, the closing price, and the low. All right? So you can see here. So again, but in 2011, the price went the other way. 2012, you see, it did below it again, that key level, the green line. If I remove my blue line, in 2013, it went back up again. And this year again, it tried to go down. So many times, it tried to retest this key level, the closing price of 2008. Again this year, we are again in the zone of a key levels. If you want to swing trade or make or position trade or day trade, okay, if you want to trade with the small market participant, you need to identify, okay, the best key levels, and they are usually on the yearly chart. I hope you have learned something from this video also, all right, and we put it into use, okay, to make excellent day trading, swing trading, and position trading decision. We are the TSTW S008 traders. This is about the power of key level trading, part 3. In this video, we were talking about the power of the closing price on the yearly chart, and we can see here on this daily chart that the price was in a declining channel, Now the price out of the declining channel on or near a key level which is at 7891. As long as the price continues to display higher lows and higher high, we will give priority to bullish signal above that key level at 7891. If you like this video, please give us the thumbs up. If you dislike it, give us the thumbs down. If you have any question, put it below and we will get back to you. Until the next time, enjoy yourself and be very happy. We are the TSTW S008 traders. This is about the power of key level trading part 3.